Kia ora, good morning, happy Friday, happy Valentine's Day. I am Mike from Markets, this is Kiwibank, Markets in a minute. Okay, COVID-19. So yesterday morning the world was feeling a little better about the coronavirus outlook and risk assets were advancing. This morning, seeing a bit of an about face with some softening in global equities and in currencies, the Kiwi, the Aussie, with a bit of subsequent semi-refirming. Those moves, all of those moves, they stem from a Chinese announcement yesterday that the number of reported cases was significantly higher than previously advised. Basically, they changed their confirmation methodology to include imaging scans as well as testing kit results. We'll link to an article featuring people with credibility explaining this in firsthand, if you like, because I'm pretty sure we don't need someone else on the internet with no medical training rattling off an uneducated opinion. I can, though, give you a semi-educated, I guess, view on the market reactions. So, by the numbers, the softening and refirming, that amounted to mild declines in US and European equity indices. US markets actually almost back to flat now. The Kiwi, that fell 30 odd points on the announcement from 66.4 to about, from 64.6 to about 64.3. We've recovered slightly from there, stabilizing in a 20-ish point range, 64.4, the bottom of that range, and we're about there now. Interestingly, industrial commodities, they're actually higher across the spectrum this morning. So what we're seeing is the market trying to adjust to new information, which is not good, but which doesn't replace the previous day's information that we could see peak infection reach this month and things getting better from there. Responding to headlines, I guess, is what the market is all about at the moment. And speaking of that, we did have a couple of non-COVID-19 headlines overnight, mainly related to US CPI. That is ticking along at 2.5% for January. Sounds pretty good, but there were some below the surface aspects of the data that were a little concerning, and we mention this every time, but US CPI, it's not the Fed's preferred measure. They like PCE as their inflation metric. So the impact of that data on the wider market, at best lost in the COVID-19 response wash, I guess, but at the margin maybe helped with the equity recovery. Maybe. Okay, there we go. Done and dusted for another week. We have a truckload of Eurozone data scheduled for tonight, and US retail sales numbers in the early hours of tomorrow morning, and of course the broadly unpredictable COVID-19 headlines to deal with. There's plenty going on. Have a great weekend. Ka kite.